Welcome to Fraud Friday. I'm Bob Coleman. Today I want to talk about a vice president of commercial lending, Kaylee Lunn, who pled guilty to loan fraud, PPP loan fraud, and also economic injuries, disaster loans. She got 4 years in jail. Now, what I find fascinating about this is that for a $500,000 fraud, if you're the borrower, you're not going to get 4 years, but because she was a white-collar criminal and a banker with position of authority, the sentence was significantly enhanced. It's a pretty hefty sentence. She was sentenced on December 5th, and let me tell you what she did. What she did is she was working for a bank by the name of Prosperity Bank for a couple of years. It was later taken over by First Capital Plus, and she used her position to fraudulently apply for PPP loans through a customer where she stole the money, and then also for herself and her husband. So she figured out that she had the keys to the kingdom, and she said, who knows what she was thinking, but she saw it as an easy way to collect loans from the PPP loan fraud fund. Now, what she did was she took the PPP loans, and in one particular instance with a customer, she went and fraudulently inflated the amount of revenues for that customer, and she also then fraudulently inflated the amount of the employee expenses. PPP loan funds were based on a calculation of what you paid your employees for a quarter, and that was the amount of money that you're eligible for. There are two steps in this. One is you made the representations to SBA that this is what my employees are, but then you had to back it up with documentation to show that you paid, and that's called the forgiveness aspect. So you could get the funds, and if you did not end up using them for purposes intended, which would be fine. You say, hey, I only spent this, but you're not going to be forgiven for that amount of money. And that was the issue in this situation. What she did, there was a company, the docs, they abbreviated it as MS, and she made the statement that said she took a business where they only earned $216,000 in gross income in 2020 and represented that there was a payroll expense of $27,000. But the business, I'm sorry, she said the business earned $216,000, but the business only made $16,000. And look at the numbers. The business made $16,380. In the PPP loan application, it mysteriously inflated to $216,380. Minor discrepancy, well, major discrepancy that got someone thrown in jail for 4 years. So those were wholly fictitious, and they did this without the borrower's consent. And then when the money was funded, she stole it. She took $49,000 of funds to, quote, pay for her own personal and lifestyle expenses. Normally, they like to embellish that in terms of the casino spending, the travel, and in this case, they did not bother to do that. But they did say that she did pay off her American Express card for $6,700. So I'll let you figure out how much that she embellished or whatever. So let's take a look at what she did. There were 5 loans involved. And the one, she increased the payroll expenses and to get the money. Now this one, and this is the classic one, she got a loan in her name as a sole proprietorship for $20,800. That is the number that is over and over and over in the PPP loan database. You do a search of that, and if you see a loan for $20,800, I think the actual number can be $20,833. That means that there was $100,000 of Schedule C income that flowed to that proprietor. Well, that has to show up on their tax returns as $100,000 of net income, not gross, but net. And what the majority of these fraudsters did is they simply showed $100,000 of income, no business deductions, and therefore the $100,000 was net income. Now, SB allowed people to do this because in that crisis, the IRS was closed down. So therefore, they could represent or they could apply on a draft Schedule C. As long as they filed what they said, then the loan would be forgiven. Well, in this situation, obviously that did not occur. She represented that she made $100,000 as a sole proprietorship while she's working for the bank. But she never claimed that $100,000 on her taxes. So when you see that in the database, I am not saying everyone did that, but I can definitely see the majority of the loans in that amount are suspicious. How about we leave it at that? I'll let you run the data for you data nerds if you're so inclined. She also got a loan under different names. And this one was $16,250 for a sole proprietorship. And of course, for her husband, she went and got a PPP loan for his as well. Altogether, this added about $500,000. In the grand scheme of the fraud, it's a small amount. And I certainly don't want to diminish the fraudster aspect of that. But the 4-year sentence is very heavy. And the reason why is she was a banker on this. And I always love, I shouldn't say love. I'm fascinated by the conditions. And this isn't widely reported. This is what she has to do while she's on probation. So she serves for 4 years. I don't have the number, but she will be on probation. But while you're on probation, these are the conditions of your probation. She cannot possess a firearm. She has to, now they waiving drug testing in this situation, but she cannot take illegal substances. A lot of times they require the drug testing, so you're on probation, you got to go down and do your thing. She cannot be employed directly or indirectly with the bank. Now, I don't know what a vice president of commercial lending for Prosperity Bank made out of Wichita Falls during COVID, but it was a nice middle class salary, and now she's barred from banking and she lost her career. She cannot, and this one's also fascinating to me. She cannot incur new credit card charges. So she can't use a credit card or open up a new credit line without the approval of the probation officer. You got a mommy and daddy now overseeing your financial wherewithal. You can't go out to dinner and throw it on your credit card. She has to provide to the probation officer all access to business and all her personal records. So it's very intrusive. She has restitution, as I said. I'm not giving an exact amount, but it's around as I said, the $500,000. The defendant shall make payments of $1,000 a month or 10% of her income, and that goes after probation. So for the rest of her life, until she pays off that debt, she's going to have to be making payments to the government. And the government is no different than anybody else, because how's the government get funded? Through taxpayer funds, which means she ripped us all of us off on that. So I always find these cases fascinating, that she saw an opportunity, and she saw an opportunity. Hey, I can do this. And just because you can do it doesn't mean it's necessarily a good idea. So she's going to start that prison sentence. She lost her career. She brought disrepute to the program and to her lender. And as always, there are no winners in this situation. The people got ripped off. And imagine the poor person who she fraudulently used that person's information to get on the base of that EIN number, and that they had a checking account, and she inflated those numbers so she could take the money. I am telling you, the amount of time it took that victim to get that off of SBA's rolls, to get it off her credit, is very time consuming and emotionally draining. You have a true victim here in terms of how do you navigate that mess. There is not a 1-800 line where you can go say, hey, someone ripped off I have a bad loan, and you can reference stories that it takes months, if not years, to solve those type of problems. And once you get in the database, you're also flagged as a risk. So it is not a victimless crime. Hey, I'm Bob Coleman. Thank you for joining me for Fraud Friday.